Can you beat the returns of the professionals? Long story short, that answer is yes. And in this video, we'll talk about how that's possible. Let's dive in. So when it comes to professionals versus you, just a reminder, professionals are in place to protect your wealth, not build your wealth. They usually put you in bundled products, ETFs, index funds, and mutual funds. And these products are essentially just, they can be 100 up to 1,000, sometimes less, sometimes more, stocks and bonds in one product. And again, they're not in place to build your wealth, they're in place to protect it. So if you're somebody who's nearing retirement or financial independence, or maybe you sold a business, maybe you sold real estate, or maybe you inherited some capital from a loved one, in that case, wealth protection is where you want to be. You can go to a professional, they'll put you in an ETF, index fund, or mutual fund. Or if you want on your own, you can go to your broker. Most brokers allow you to buy ETFs and index funds. All right, and then something to call out here, professionals are not in business to buy individual stocks. If they have just one customer, sure, but a lot of these professionals, they have 10, 20, 30, 40, 50, sometimes more customers, and trying to pick stocks for each customer is nearly impossible. I remember talking to somebody who tried to do that. They had I think close to 40 customers, and they were literally working 7 days a week, 10 to 12 hours a day. It was a huge pain. I think they eventually shut down their business. In other words, made a big mistake. So what the professionals do is they usually understand your risk tolerance, and then they put you in one of three buckets, sometimes more, but it's usually here's an example with ETFs. You have your high risk, your mid risk, and low risk. They put you in one, rinse and repeat with every customer. That way they can have decent work-life balance. So again, they do not pick individual stocks. Now, when it comes to you and I, we are in the mode where we can build our wealth. If you're somebody who's still working, you maybe have thought about a timeline to retire or achieve financial independence, then you should be buying individual stocks. And fortunately, you can do that because you're not managing other people's money. You're just managing your own money. So you can use a tool like Tykr, find some good businesses, put together a portfolio, and start seeing those bigger returns. So jumping into the comparisons here, ETFs, index funds, and mutual funds typically return about 6 to 8% per year. I know the last 10 years, it's been closer to about 13% for index funds, but over the last 20 years, it's closer to about 8%. I usually tell people set expectations, aim for that 6 to 8%. And again, if you're investing in these individual products, you shouldn't really care because it's not the returns you're looking for, it's the protection. You just want to protect your wealth. And again, these products can have between 100 and 1,000 stocks and bonds in one product. Some just include stocks, some are a mix of stocks and bonds. Now with stocks, we can get those returns that can range between 15 and 50% because we have a very focused portfolio. Like in my case, I have 10 stocks and my returns over the last 8 years are closer to 50% per year. It's actually pretty easy to achieve. I don't have a lot of noise in my portfolio. I don't have 100 different stocks. I'm essentially creating my own index fund. It's just, again, 10 really strong businesses. I keep buying more every month, and I especially buy more when the market goes down. You rinse and repeat, keep doing that. That's how you get those bigger returns, and that's how you really build your wealth. Now, just to go a little deeper into ETFs, index funds, and mutual funds, these products, these bundled products, usually contain at best about 10% strong companies and 90% really weak businesses you and I should have no business buying. But unfortunately, those stocks, they can hold us down, they can hold us back. And we're going to use a sports analogy here in a little bit, but that's essentially what those products are. But again, you're not looking to build your wealth with those products, you're looking to protect it. So if they have, 90, 99% weak businesses, who cares? It's all about getting that 6 to 8%. We want to outpace inflation. If inflation is 2 to 3%, I know in 2022 it was 9%, but usually we want to see it around 2 or 3%. You just want to beat inflation. That's it. Now, when it comes to stocks, because we can pick individual stocks, we should have over 90% strong businesses in our portfolio. Unfortunately, Tykr, can certainly help you do that. So let's jump to that sports analogy. We're going back to 1992 Olympics. The Olympic Committee that year allowed countries from around the globe to recruit professional basketball players. So the US was like, are you kidding me? We know exactly who to go for. So they recruited players including Michael Jordan, Magic Johnson, Larry Bird, David Robinson, Patrick Ewing, Scottie Pippen, and the list goes on. Essentially selecting the 12 best players. They called it the Dream Team that year, as opposed to looking around the NBA. I think that year I did a little homework. There are a little over 400 different players, a mix of great, good, and maybe not so good players, and filling their bench with that mix. But again, they decided to select the 12 best of the best. And what happened? The results, they won every game that year, that summer, 1992 Olympics. They won every game by an average of 40 points, and of course, won gold for the US. Winning every game by 40 points is like almost unheard of, but they dominated. It was pretty much a competition for second place. So when you think about it with stocks, you and I, we can create our own dream team. We can pick the 10, in my case, 10 of the best of the best. You have hundreds of stocks to choose from, a lot of noise, a lot of stocks that can hold you back, but we can avoid those. We can use Tykr, cut through the clutter, find the best of the best, and create our dream team. And that's where we get those big returns. We should be aiming for, like I said before, between 15 and 50% year over year. And that's how we beat the professionals. But at the end of the day, professionals aren't looking for the big returns. They're essentially just looking to protect wealth. If you like this video, go ahead and hit that like button. If you want to see more like it, hit that subscribe button. And if you want to learn more about investing, go ahead and check out Tykr.com. See you in the next video. Bye for now.